Hello, welcome to the weekly technical analysis review here at xm.com. I'm Rafi Barajan, currency analyst, and today is Monday, July the 9th, 2018. The pairs we're going to be looking at for this week are the pound dollar, USDCAD, and the Aussie yen pairs. We're going to start first with pound dollar. We can see there's some strong upside momentum in the near term. RSI has crossed into positive territory above 50. But if you look at the stochastic oscillators, they've already crossed into overbought levels above 80. So we could potentially see a downside correction in the very near term. Prices earlier did find resistance at the 50-day moving average around 1.3355. We would really need to see a break above the 50-day moving average in order to strengthen the upside momentum further and see an attempt towards the 38.2% Fibonacci retracement of that longer term up leg from 1.1986 to 1.4376. So that's around 1.3460. Should there be a break above 1.3460, that could potentially signal the end of the current bearish phase. However, if we do see prices drifting lower further, even more, we could then see immediate support coming from the 1.33 handle. Below that, we've got the 50% Fibonacci at around 1.3180. A breach of the 50% Fibonacci would open the way towards that 8 months low, 1.3048 we saw back at the end of June. And if we do see a drop below that low, that would reinforce the bearish outlook in the medium term. Let's now turn to the dollar CAD because we are seeing downside correction in the near term. RSI has now crossed below 50, and if we have a look at the MACD, the histogram has been falling since the end of June and is well below the red signal line, though it does remain in positive territory, signaling that there is still possibility for some further upside in the short to medium term. If we do see the current downtrend though continuing, there's likely to be support at around 1.3060. That's the 38.2% Fibonacci of the upleg from 1.2527 to 1.3385. A breach of that support would open the way towards the 50-day moving average, which is just around the 1.30 handle. And then further down, we've got the 50% Fibonacci at around 1.2955. So a breach of those supports at the 50-day moving average and the 50% Fibonacci would shift the focus back to the upside. However, if we do see USD-CAD turning higher again, the next resistance should come from the 23.6% Fibonacci at around 1.3183. A break above 1.3183 would then enable the pair to challenge that one-year high 1.3385 we saw at the end of June, and then a break of that high would signal a continuation of the medium-term uptrend. And our final pair for today is Aussie Yen. We can see the pair has been trading sideways since March. At the moment, there is strong resistance from the 50 and 100-day moving averages around 82.50. If the pair does manage to break above that level, we're likely to see the next resistance coming at around 83.30, and above that we've got another strong resistance at around 84.50. We can see that level has acted as resistance several times in the past and is also near the 200-day moving average. A break above that level would take the pair outside of its current range and could possibly signal a shift to more bullish outlook in the medium term. However, if we do see the pair reversing lower again, which isn't too likely given the positive signals we're getting from the RSI and the MACD, but nevertheless, support to the downside should come from around the 82 level. Below that, we've got the 81.10 area. And then if we do see a break below 81.10, we're likely to see that 16-month low of 80.49 from back in March coming into focus. A breach of that low could possibly signal a return to the bearish phase that we saw early in the year. That's it from me. Thank you very much for watching and have a great day.